let's quickly head across to Rashesh Shah, Chairman and CEO at Edelweiss. They've come out with their numbers and he's addressing a press conference post that.
In the last 1 year, and our growth is also a reflection of that. Our excluding insurance, the profit after tax for this quarter is 90 crores, which is a 45% growth over last year. And we have a total group equity base net worth of 3,261 crores. And I'm happy to say that for this quarter, we have been able to clock return on tangible equity excluding insurance of 15.1%. So, which is also almost a 300 basis point improvement over ROE a year ago. And we've been able to achieve this by not aggressively growing the balance sheet. Our balance sheet has grown only by 30%, but the profit has grown by more than 45%. So overall, we have got our old strategy of continuous growth and non-linear growth. We have also used the current good macroeconomic environment to strengthen the balance sheet, to improve liquidity. Our gearing is only 3.7x time on the balance sheet, which gives us a lot of headroom for growth. And we've been rated AA by CARE and ICRA and A1 plus by CRISIL. And overall, all the business groups are in a very good shape. The 5 business groups that we have, credit, our entire book size is now almost 9,800 crores, which was 8,800 at the end of first quarter. So we've added about 1,000 crores of credit assets in this quarter, and both wholesale credit and retail credit have grown fairly well. Our asset quality is under control. The provisioning continues to be more than 100% on this book. So overall, a fair amount of traction on the credit side, which has been a steady, stable growth business for us. Commodities business is also scaling up well. From the precious metals part of the business, we have added agri products and pulses out there, and they are also doing well. And we do think that with the announcements made by the new government, there is going to be a lot of opening up in the commodities sector, which will lead to opportunities for financial intermediation out here. The third group of business we have in the financial markets that obviously has had a good quarter on the back of a lot of activity in the capital markets. So both on the broking side, investment banking side, on IPOs, on all fronts we have done fairly well. We have also added a lot of clients on the global wealth management side in this business. So that goes fairly well. The fourth business of asset management is also, again, has been able to capitalize on the growth in capital market activity. The inflows in both our mutual fund as well as on our advisory asset management businesses have grown. Our asset reconstruction company continues to be the leader in this business, and we're seeing a lot of traction in that. And we do think that given the amount of stress that is there in the banking portfolio, asset reconstruction will continue to have a lot of opportunities. Obviously, pricing and returns and all are going to be important in that. On the insurance side also, this was a reasonable good quarter. We have grown by about close to 60% on a YOY basis. And the highlight for this business in this quarter has been that all our funds, all our ULIP funds, the 6 funds we have, all of them have been rated as 5-star by Morningstar. So this has been a big achievement. The investment performance has been very gratifying, and it just augurs well for the growth of this business also. So along with that, we continue to invest in risk management, compliance.
Also on earnings edge, we've been tracking the entire IT pack. Tech biggies have delivered a muted set of numbers. TCS cracking 7% in trade today after missing estimates in the second quarter. HCL Tech also, which posted numbers earlier this morning, also down 7% after first quarter.